We'll start with the first question for Mr. Jyoti Sagar, who's been also an investor, an active investor in the ecosystem and amongst a lot of startups. So, what are the three things that you see while you kind of explore startups to invest in? What are the three major elements that you would say that these three elements are the most critical element when you explore investing in a startup?
Sandro, thank you for having me, and I do join all of you in expressing our condolence for Harish. He was a dedicated employee of the company and a wonderful person, and passed away so young. So, Bharti, do convey my condolences to Harish's family. Sandro, why do angels invest? It's a very good question, but actually, that's what, in a way, you are asking me. Why and how do we invest? Because when you say what you look for, it really is what motivates me to make an investment in any venture. So I would say that there are three things which are important. And obviously, we begin with the idea itself. The idea has to be something which, in a way, rhymes with you. It is something that it makes sense in a way, as something that you would like to pursue further and have a look at. And number two was, of course, the team. Who are the people who are behind it? Thirdly, I would think is, and it's in a way connected to the first, is really the outcomes of that venture. What is it that that venture is trying to achieve? And is that something which kind of works for you? And clearly, whilst for me personally, I know that angels, as I said, are differently motivated, and as they say, different strokes for different folks. And for me personally, return on investment and so on is important, but it is not critical. I have my own definitions of what is a return, and what to really truly return means in the sense for an angel investor. So I would say the three things, if you were to ask me, would be the ideas, what the idea is. Number two is the team. What is the team, and are they committed? Is that the team you can rely on? And number three is the impact that the venture will have. So those three are the first things for me, and investment returns, everything else comes after that.
Thank you, sir, for that. I hope all the attendees who are listening to us are actually taking a note on this, because these are valuable piece of advice, which is or information you want to say it as, which comes in from the investor. So with this, I move on to the next question for Bharti and Kushagra. I mean, one of you can pick it up. So fundraising always is a challenge, right? So and especially in a sector like what you're operating in, clearly impact investments are very rare to be seen, and with limited VCs around or investors around looking at it. How difficult was it for you to do fundraising? And eventually, when you met Mr. Jyoti Sagar to kind of explore for investment opportunity, how did that happen? And why did you go ahead with him? And followed by that with Indian Angel Network eventually also coming into the picture. One of you can.
Maybe, yeah, I'll answer that.
Sure.
So, fundraising as a process, and you said that, as you said, right, the sector that we are operating in is a unique sector, or a little differentiated than usually what you get to hear about. But as founders, the way we saw the whole process was less about what sector and is it impact or is it not impact. Because when you're raising capital, especially from institutional investors, basically, as Sagar sir mentioned, right, it is about the problem statement that you're trying to go after. It is about the solution that you're building. And third, of course, is the return that you can offer to the investors. And although, of course, I mean, we are in the impact space, climate change, that is something that we are very passionate about. In fact, our whole team is in a way, that's one of the significant motivation that we have within the company, that we are trying to improve air quality, tackle climate change at a city level, national level, and maybe in the future even the international level. But when you're raising capital, you have to be very clear about that. There's certain things that any investor will look at, which is essentially the problem statement that you're going after. How well articulated is that problem statement, right? Your solution or your approach to your problem. If you're at an early stage, maybe you'll not have a defined product or a technology or a solution, but what approach are you taking? How are you going about thinking about that problem statement? What is your thesis around the whole solution? Why do you think it will work? Why do you think something else will not work, etc.? And third is, of course, that over a period of time, how is it that you will also help your investors make more money, right? Because at the end of the day, it's a private limited entity, etc. But different investors have different time horizons and other details like that. So you need to have a very clear vision as to how can you also make money for your investors as you go along the journey. So my and our perspective on the whole fundraising exercise was precisely that lens, right? The problem, the solution, and how are we going to make money for every stakeholder involved within the entity. The space, etc. Of course, as Sagar has said, that there are different things that motivate different investors, and if you have these three things well articulated, right, and if what you're presenting makes sense, you will find investors in the market, right? Because there will be people who will be motivated by different things. There will be investors who will have different theses. There will be investors who will be looking at diversification, etc., all of that. So the idea is that rather than focusing on what sector or what kind of venture, we always focused on these three things, and then just put ourselves out in the market, and then of course you will find the relevant investor who will be interested in investing in you, right? So that is the approach that we took. Regarding our the other question that you asked, that regarding taking investment from Sagar sir or IN. So first, I'll maybe share our experience with Sagar sir. Sagar sir is not just an investor in Chakra, but he was also our first paying customer. So he was the first one who actually placed a order with us, and we delivered the equipment to one of the offices of JSA. And basically, so this relationship started, I believe, in 2017. And basically, he saw what we were doing. He was passionate about air pollution, climate change, and we in a way, used to seek his help on various subjects and matters. And he actually saw the progress, and finally he decided to invest in 2019. So it was like a 2.5 year long relationship that was there before the investment actually happened. So Sagar sir, I mean, and I don't think we selected Sagar sir. I think it's a honor and a pleasure to have Sagar sir as an investor. Anyone that who gets an opportunity to have a distinguished person like Sagar sir as an investor, I don't think there's a choice that you really have there. So it was, I would say it's more of that, he chose us than we chose him, right? And I think Sagar sir might be able to share more details as to why he decided to invest in us. Regarding IN, very similar experience. As I said, that an introduction. In fact, Sagar sir only made the introduction. We came to IN's office for a chat, right? It was not a pitch to say, it was just a chat about what we are doing, why we are doing, how we are doing, where we are in our journey, and what is it that we need, right? And as I said, that conversation with, in fact, the first conversation that we had was with Saurav sir, then turned into a formal presentation. IN wanted to learn more. We felt IN brought in a lot of value in terms of the kind of stature that various investors in IN had, the kind of resources, network. Some of the industry veterans are part of IN network. So we just felt that of course there's a lot of value, and then the whole conversation progressed really well. We saw synergies. We saw that we can maybe enable each other in achieving our objectives as well. And that is how it essentially turned into an investment from IN.
Thank you for that, Kushagra. Jyoti Sagar, next is for you. So there are, ideas are dime a dozen. You will find a lot of opportunities to invest in, and I'm sure you would have come across a lot of companies while you were looking at Chakra Innovation at the same time. Why only Chakra Innovation? Why not any Me Too or other things? One impact you did mention in the previous question was that you look at impact as as an end goal also. So just if you could add more to it.
Okay, so first of all, and I don't want to sort of sound any in a deprecating way for investments and ventures in many other spheres where I have invested. I mean, total I think through, as an IN member, I have so far probably invested, I believe the last count was 35 ventures, of whom I think about 5 or 6 have folded up. Some are doing reasonably well, and some are kind of struggling along. And and one is watching that with great interest as to what happens there. So the investments have ranged from, certainly from apps to and that all covering, going all the way to jewelry and agriculture and healthcare and ventilators to stem cell technology. So it's a very wide area where I have made investments. Now, talking particularly about chakra, and so here was something which was interesting as I saw it, and that was what one, of course, it was a well. I let deliberately choose the word. It's a refreshing change from an app, because every Tom, Dick, and Harry, their uncle and their nephew, everybody's making an app. And here was a bunch of youngsters who actually were doing something hardcore technology, hardcore engineering, looking at a big problem and finding a real solution for that problem. I mean, that's a day-to-day problem. So from my perspective, that actually in terms of the work on the environment, the impact on the environment, was very, very critical. It's very important. And frankly, I felt that this was the venture that had to be supported, that one had to give all support that one could to a venture like this, and that ventures like this should actually succeed, because it is important for us as a country to have a strong engineering, to have a strong manufacturing base, because we will not be able to survive just on services and so on and so forth. So I have firmly believed that. So in a way, I was trying to put the money where my mouth was, where you advocate people to do hardcore engineering and real high technology stuff in terms of other than simply what is just called high tech per se. I had a very personal thing as well, troubled by for example, the pollution in Gurgaon. I have a couple of family members who suffer very, very severely during the bad winter periods. So that was something which was in my mind, and I was very, very keen to promote any project which would have anything to do with air quality. And I was just simply impressed by the results that they had, i.e., when you're looking at something like 95% particulate matter being knocked out of your diesel exhaust. I mean, that is outstanding. It has never been achieved anywhere in the world. So the technology was really was top class. And so in a way, it just rang a bell from various different, emotional or other reasons. It appealed to me as something which I needed to invest in. And of all my investments, this is the single largest investment. It is the single largest investment in any, I would say here, it was a startup, because I would not, you can stretch the definition of angel and bring me in, but I basically came in literally 2 years after some of the earliest angels had come. So to that extent, it would be, as I said, extending the definition of angel a little bit. But I came with the heart and mind of an angel, even at that 2 year later stage.
Fantastic. Thanks for that, sir. Kushagra, Bharti, we've talked about investment in the space and, the space overall. I think it's time for you to kind of actually tell us a story about how did you stumble upon the idea? Where did this all started? And, everything around it. So it would be great to get that insight. And also do talk about the product so that, our audience get to know what the product does and eventually what is the final good product that has been made out of it.
Sure. So, in terms of how we stumbled upon the idea, etc. So basically in 2015, WHO came out with a report that, said that Delhi is the most polluted city in the world, and not just Delhi. I think that year, out of the 20 most polluted cities in the world, 12 were in India. I believe that number has grown to 14 or 15 this year.
No, Kushagra, it's now 20 out of the first 30. So we are progressing, at least in some area.
Yeah. So basically, when in 2015 that news essentially came out, of course, media, government, in fact, even the Honorable Supreme Court of India, I think everyone took cognizance of the matter, and there was a lot of awareness, a lot of articles, certain judgments by the Honorable Supreme Court, certain statements by the government at the highest level were out there, and and at that point in time, I was doing my undergrad at IIT Delhi. So IIT Delhi being, at the center of all of this, a lot of professors were part of various technical committees, expert committees. Of course, on campus also, there was a lot of discussions as to air pollution, what does it mean, where does it come from? And, coming from a technology background, if there's anything we can do to help improve air quality. So that is how basically the idea originated, right? That air pollution seems to be a large problem, seems to be impacting almost 90% of the Indian population. That is billions of people, and even globally, other developing countries, etc. It seems to be a prominent source of problem, various health ailments, etc. And that is how we started. That we just wanted to go out there using our whatever skill sets that we had, wanted to find a way to positively impact this problem, right? Whether we'll be able to completely solve it, partially solve it, what percent, etc. I mean, all of those things were difficult to determine at that point in time, given the scale of the problem. But the idea was to try and figure out that, this seems to be a problem, it seems to be a real problem. And coming from a technology background, we wanted to find some technical solution to this problem. And that is how basically the thought process in a way evolved. The other thing was that, both Bharti and I, so Bharti is 2 years senior to me. She was working at the Boston Consulting Group back then. But both of us were very, very passionate about, hardware. So, and I mean, nothing against anyone, but that is just something that we felt more passionate about, hardware, hardcore engineering, etc. And we wanted to build something, right? Something that you can touch and feel, etc. We just felt very, very passionate about such a thing. So I think these two things essentially was how the whole thing originated. Later, of course, we looked at, when you say air pollution, what do you mean by it? Particulate matter, PM10 and 2.5. I believe everyone would be aware of these terms. Seem to be the major, the health scares. So they cause respiratory problems, cardiovascular problems, even cancer, preterm birth, etc. And then we finally narrowed down to stationary diesel generators because they were contributing significantly to air pollution, especially in metropolitan and other larger cities in India. And finally, in 2.5 years, what we built was, so just to tell everyone about the product. So it's
Kushagra, I just wanted to intervene. I think it's a good thing. I think you need to tell them the little story of your Apple and Newton and gravity moment. I mean, there are moments, and the story that you had of the juice vendor. I mean, that's a very powerful story of how things actually happen.
Sure.
So why don't you retain that? That's because life is all about stories, I think, and that's a wonderful story.
Sure, sir. So very interestingly, during one of our normal visits in Gurgaon, so we were having the sugarcane juice. So as everyone would have seen that, on the roadside, there are these vendors who have these crushers, and they're very small diesel engines which essentially power these crushers, right? And these are very small, like 5 HP engines or even smaller. And what we saw was that at one of the stalls, this engine was facing a wall, and that wall had turned black because the exhaust was hitting that wall, and the wall had turned black. And we were just there having sugarcane juice, etc., and all of that. But that idea, I think when we saw it, it kind of triggered that, since the pollution coming out of the diesel engine is turning the wall black, right? And in a lot of applications, you need inks, paints, etc., where you do need black color, right? So there seems to be some correlation in terms of the emission that is coming out. Can it be, deliberately be captured and used as inks and paints? And that was, just a very, very brief idea. Then what we actually did was, came back to IIT, ran a lot of tests on these black particulate matter that comes out of diesel engine. Figured out that 99.9% of that is actually carbon, and very fine carbon. And what fine carbon essentially means is that the quality of ink will also be very fine. So if you're able to capture that, you will be able to make very, very good quality or fine quality inks and paints. And that was one idea that kind of triggered and drew us in this direction, that capturing the particulate matter and then finding a way to just repurpose it. In fact, our name Chakra actually came from that, because we were in a way inspired by completing the circle of pollution, and that is how the name Chakra innovation came about. So that was one incident that in a way drew us in the direction that we finally took.
Thanks, Kushagra, on that. That's a great story to have and great inspiration that way. The next one is for Mr. Jyoti Sagar here. Sir, when you look at these companies where you've invested and you kind of support them and mentor them also with time, what are the elements of, where you say that, there is a common problem that you see with entrepreneurs, or say there is a common space or a room for improvement that you regularly see with entrepreneurs, and kind of that's the only major problem that you see needs to be rectified every now and then?
Yeah, okay. So my vocation in life is a practice of law, and it has generally been over the last many years in two specific fields. One, of course, is corporate law, and the other is intellectual property. So I am involved with two different firms. One is a corporate firm, other is an intellectual property firm. So when I look at startups, some of the things, and I really, in that sense, speak more from a lawyer's perspective. I don't speak so much from marketing and management, although in terms of managing two law firms, I have learned a few things about management, because lawyers are probably the most difficult people to manage. Second only, I believe, to journalists, or the other way around. I'm not very sure. So I mean, I have learned a few things in terms of management, in terms of managing people, and so on and so forth. But basically, the lens I look at is from legal issues and legal things. So one of the very common things that I find, and it's getting better now, but it has been a problem, is the agreements at founder level. Very simplistic thing. Once you start a venture, a lot of the people will, as co-founders, will go into a venture without really settling their own affairs as to their own relationship, as to how they will operate as founders and what they will do, whether it is role definitions and whether it is relationship definition as between the founders. So in terms of the building blocks, that should really truly be the first building block when you have more than one founder, that at least the founders should have a clarity as to what they are going to do. The second, again, is in a sense that in a lot of the times, and I have nothing against chartered accountants, by the way, they do a lovely job in their own sphere, but I find that most of the startups, for some reason, and I think the law firms and lawyers themselves have to look a little bit, introspect ourselves as to why is it that the chartered accountants are kind of the first port of call for many people who are setting up a firm or setting up a company, and they end up working with chartered accountants. And as I said, I have nothing against them. They do a wonderful job in accounting sphere, but I've always found as one is maybe developed a knack for it. When I see a startup come into my office with some problems, they put together in front of me agreements that they have either with some suppliers or something. And I immediately say, a chartered accountant ne draft kiya tha na? And always the answer is yes. So I have a feeling that most startups actually do not get on board legal advice early on. And those could be as simple things as founder agreements, versus then carrying on into all the other areas, whether it is employment agreements, whether it is confidentiality, whether it is simple things which eventually are of importance as corporate governance items. Do you actually have a board in place? Are you holding your board meetings regularly? Are you recording them? But why? Because when you go to invest, and when that infamous thing called due diligence comes up, and if you all got your nose clean, you got everything sorted out, everything is there, it actually adds value to the company. It actually adds value to the venture. So simple things like founding documents, following simple corporate governance policies, getting some precautionary things like confidentiality agreements and so on in place. These are very critical things. And a lot of the times we find that, the startups don't really care about that. The second piece is, of course, the intellectual property, because let's not forget that for any venture, I call it an unfair advantage. If you have a valuable intellectual property and you have registered it, you actually have an unfair advantage over everybody else. And it's a very strong factor that will be taken into account by investors who may want to come in and say, okay, this is a great idea, but will somebody's uncle copy it and start doing it tomorrow? Or is there a protection for the investors and for the venture itself, that the technology is protected and it doesn't get stolen and it doesn't get misused or infringed? So I think it's also important for ventures to say, I've got a great idea. Is something out of this protectable in any shape or form? And what I should be doing to protect it, and do it as quickly as possible. So even, and that I was, and to give you a little inside story, I was very angry with Kushagra and Bharti. They were using a firm. I have respect for that firm, but their patent was pending for years, and they didn't utilize the startup opportunity, this fast track, and they didn't. And until the time, we said, look, you must do this. And lo and behold, in 3 months' time, the patent was granted, but it could have happened much earlier, for example. So I think it's important for people to have themselves realize the value of their technology and look for ways and means of best protecting it. So those would be a couple of two things that I wanted to mention on the corporate side and on the intellectual property side.
Thank you, sir, on that. Kushag, Bharti, you've seen a lot of, investors, you've dealt with a lot of investors in the past, and you're dealing with them as they sit on your cap table too. What are the value adds that you see as an investor beyond money that you see that comes onto the platform for you? And if you could share some story around that in terms of, how that really impacted you. I think Mr. Jyoti Sagar did mention about the legal aspect of it. That story is anyways out. So if you have something better, I think that'll be great to have.
Sure. Thank you, Sandro. So I think we have a lot of stories on that front. I think in terms of all our investors, we've been very fortunate. Starting from the very beginning, this was in 2016 when we had raised an angel round. This was mostly, people who we knew either from college or from internships. And they were basically seniors from college and from organizations we had interned with, who had come together and helped us in the initial stages. And obviously at that time, money is important, but more than money, guidance is very important, right? What kind of people do we hire? How do we go about the product testing, etc.? And we got a lot of support from a lot of our angel investors in the initial stage. I think post that we raised money from IDFC Parampara. Again, from them, apart from money, we got a lot of guidance in terms of how do we set our processes in place, how do we actually start building it a company, more than just a group of enthusiastic engineers who had come together. And I think post that investment, obviously Sagar sir came in, and we were already in touch with Sagar sir regarding because we were he was our first paying customer. So sir really guided us, as sir said. So first of all, on the patent, and we clearly remember that time when he was very, very angry with us. But it was actually quite a magical moment for us, because the KNS team actually helped us expedite that patent, and we never imagined it could get granted that quickly, and it did, and it was a huge moment for us. However, one of the most significant stories that I would like to share is probably during the COVID pandemic. So when the pandemic had just started, all of us were obviously very confused, right? That what is going to happen. Then there was a lockdown, and as a hardware manufacturing company, there isn't much you can do once there's a lockdown. We spent about a week writing down SOPs and doing everything that we could, but we realized that that's not enough. So that's when we started thinking that we would want to do something to contribute to the situation. And we got immense support from all our investors. In fact, I just saw Mr. Vikas Kuthiala, who's one of our angel investors, is also on attending the session. So Vikas sir, Dr. Naresh Agarwal, Ajay Chaudhary sir from IN, and then obviously with the guidance of Saurabh sir and Padmaja ma'am, we were able to actually put together a product that could decontaminate and enable the reuse of N95 masks. We were able to get in some grant funding to deploy it at various hospitals. It obviously helped the country, but it also helped us as a company utilize our resources at that time. And obviously, sharpen our skills, and also because the revenues had dipped, not have to let anyone go, and ensure that the company continues. So at that point, what was most moving to us about all our investors was the way they spent time with us. Not only it wasn't just about telling us to do this, but they actually spent time with us. I clearly remember Dr. Naresh Agarwal, who was one of our investors. He actually spent hours with us, helping us draft our FDA application, because he had done it earlier. So those are the kind of things we feel that really make us feel that we've been very fortunate in terms of the investors we've had on our cap table. ONGC again is one of another one investor. They are a PSU, but again they've come around very quickly in all the things where we needed support.
Great. Bharti, just hold on to that, because the next question that I have is quite related to that with COVID in place, right? Because we see a lot of companies kind of literally shutting down in such hard times, right? So the question here is that how do you both, kind of support each other? And I believe that for any company, the biggest asset is their backbone, which is their team, right? How do you kind of keep up the spirit of the team together and yours in such situations when most of the companies are shutting down, or you're running out of business, there is no client in the market? How do you kind of keep keep yourself motivated enough to kind of move forward, and your team there?
Sure. So Sandro, I would say, like, at least for us, I think Kushagra would also agree that it probably works the other way around. I think our team motivates us more than we motivate them. And again, we've again been very, very fortunate in that sense. To be honest, the kind of passion that each person in our team comes with, all of them are always ready to go beyond the call of duty. They're always ready to put everything that is there at stake for the company to make sure things work, is actually quite motivating. And if you see your team members doing that, there is actually no scope for you to lose motivation. And I think even through this COVID-19 pandemic, I would say that the entire motivation to say, open the plant again, take all of those risks, actually stemmed from the team saying we wanted to do something, because it was actually them saying, we're not going to be able to sit at home, right? We need to do something. And they were the ones who came up with different ideas on what can be done. And obviously, all of them were ready to help build that product, help test it out, even visit hospitals. In fact, one of our senior team members, Tushar, he actually spent so much time in the hospitals. We were scared that he needs to stop going to the hospitals now. So it's actually, I would say, has been the other way around. The team has actually they've always seen Chakra as their own company, and when they start doing that, when they start behaving like shareholders, then everything turns the other way around, I think.
That's the value, right? That's the value that you see when your team members work together hand in hand with you and kind of support you to reach eventually at a common goal where everyone wants to be. That's fantastic to have a other way around situation. I rarely get to hear something like that from a lot of entrepreneurs that I speak to over the last 10 years that I've been around with Indian Angel Network. Honestly, that's something really commendable. That means they're kind of really happy with you guys for whatever you're doing, right? So,
Yeah,
this is
we would like to believe that, Sandro, that they're really happy with us.
yeah, yeah. So, Jyoti Sagar, sir, this is for you. So, in such pandemic times, any feedback, I mean, any suggestion that you have for our budding entrepreneurs who are there out there listening to you in terms of what measures they should take, and, how do they should actually keep motivated and go after their vision that they have in mind and not lose hope?
Yeah, well, I mean, I think it's a tough call for startups, and there are several that I have invested in where there have been huge problems, because basically, if your revenue is all drying up, and you are struggling with trying to get your product into the market, and there is no you don't have funds, marketing funds, and you don't have actually even ability to pay your people. So I think it's clearly tough time. So you can all do and say homilies like, well, tough times don't last, but tough people do. So when things get tough, tough get going, as they say. So I think there isn't really, frankly, a silver bullet here. There isn't any golden answer. The point is that you simply have to have the faith of carrying on. And now the question is that all of us felt last year in April, May, June that this is going to be over. And now we are in August of 2020, 2021. And I think this is going to go on maybe all the way up to mid next year, because until you have 70%, 80% of the population vaccinated, you're not going to get rid of COVID at all. So this is not a sprint. This is going to be a marathon, and you actually have to prepare mentally and with ever other resources that you need to have to sustain yourself during this difficult moment. I mean, there is really no big advice that I can offer, or I can predict how things will go, because it's it's the most unpredictable situation that we've ever witnessed. I mean, we as humans love predictability, but this is not a situation where there can be much of a prediction. All that you can say is the homily: stay on course, stay committed, have your faith, cut your expenses, figure out how you're going to last out, during this time, and really, honestly, hope for the best. I mean, I'm not offering, as I said, any silver bullet answer here, because there isn't none. But you don't know how long this is going to go on. You have no idea how things will turn up or how bad things will turn up. I mean, just imagine how all we felt great in January, February, and what happened.
Yeah, yeah, true.
So this is a difficult time. It just is a difficult time.
Thank you, sir, for that. I think I've kind of overshot the time here. We need to open up a Q&A now. Before I do that, one last question that I want to throw at Kushagra and Bharti. And this is, in a way, one of my favorite questions that I ask a lot of entrepreneurs who've been actually at it and doing good. In terms of as entrepreneurs, right? I mean, there's hardship. It's a tough journey. So you would have that moment, the tipping moment where you say that, this is not working, and probably, you kind of break down and you're like, let's shut this down and, just be peace with it, right? So, get back to a 9 to 5 job and a peaceful life. Why struggle so much, right? So sometimes you have that feeling. I've been an entrepreneur myself. I had that same feeling multiple times, right? So, and I believe this is an ongoing feeling that everyone has, because I've experienced this with guys who have raced beyond Series B also. They talk about now also when they've at that stage, right, where they feel that, I don't know where this is headed, but yeah, I'm on it. But the point that I'm coming to is to, if you could share some insight, because that could be some of the motivation points for our budding entrepreneurs who are listening to you. Because there's always a good side and there's always a bad time, right? So when you have a bad time, how do you kind of cope up? pull yourself up, pull yourself. I mean, considering that you are two, I mean, there's single founders have a really hard time. Two people still kind of, have shoulders to kind of rub each other and kind of support, right? So how do you do that? And if you have any stories to share around that?
So, Sandro, it's definitely a tough question, and obviously a relevant one. I think every founder would feel that kind of a pressure, especially when things aren't going well. I think when things are going well, it's still obviously easier to deal with that kind of pressure. One such moment, I wouldn't say it was a moment of give up, of packing things up, but more in terms of, just feeling whether, we were even up to the mark to be running a company, right? To be taking responsibility for the employment of so many people and the money for so many investors. So this was post the first wave of COVID had come, and there was this 1 month. So post COVID, because we did not raised funding, we were, in a way operating with a very tight working capital. We had orders, we had to deliver, but obviously it was we were operating on a very tight working capital. We had not gotten working capital sources in yet, and it was all, basically that you do collections this month and then you have salaries to pay next month. It was that kind of a cycle. And this 1 month, I remember, one of our inflows had gotten, what we had expected to come in had gotten missed, and we had to delay paying salaries to all our team members by about 10 days. We obviously, took some personal loan to try and make up for some of the urgent needs for a few people, and everyone else was obviously very supportive. They were able to wait it out. But this was one moment when, I felt that whether I had the capability to also take up the responsibility of being a founder, of having the organization depend on you, having the investors depend on you to run the business, and then you suddenly feel that you're not probably not capable. So that was one moment when I felt that way. Obviously, things got better. We actually got in some debt from the bank. One of our investors, actually ONGC, agreed to give us some more investment money, and we were able to revive, and now we are looking at raising more funds, and business is looking better. But that was one low point, which I would share. I don't know if Kushagra has anything else to add.
Kushagra, would you like to add some before we
Yeah, sure. So I think, over the journey, I think there have been multiple moments, from sometimes, the technology not working, and then you questioning that, whether what you're even trying to build from a technology perspective, is that even possible or not? Running out of funds, running out of customers, revenue, etc., something or the other. But I think one thing that I really do enjoy, and, I think that does, keep the momentum going, or for me, the motivation going. I think the people that I get to work with at Chakra, right? I think that is one thing that I personally really enjoy. I mean, it's something that in a way takes away any other burden, any low point, any demotivating thing that you have going on, right? So I think that is one thing that has really helped me. So having Bharti as a co-founder, some senior people that we have in the team, Tushar, Khushbu, I mean, it's just been a very, very enjoyable journey for me. And even right now, right, I mean, even the kind of challenges that we face are different, but these are still challenges, and these are I mean, sometimes we do feel that, maybe we'll not survive, or is it even worth it? Maybe I should get another job, go abroad for higher education. Why not go to Silicon Valley? People seem to be raising a lot more capital there, and all of that, right? And you do interact with your batchmates, your seniors, etc., and all of that, right? So, but all of that, I think, is very, very momentary, because once I'm alone, get back home, etc., I think these are the people that I would actually work with. I mean, no matter what. And what I've kind of understood, and being fortunate enough to have mentors and advisors and investors like Sagar sir, the IN network, is that if you persevere, if the problem, second, if the problem that you're solving is a real problem, And third, if you're really able to create value and solve that problem, it's only a matter of time that other things will follow. So basically, just these three things are actually what matters, and then it's all just a matter of time, and success is bound to come around, right? So I think for me, it's basically the people that are there at Chakra that keep me going, and then this thing that I've learned and observed by interacting with various people, that just get to keep these three things in mind, and eventually you will succeed. I mean, might take longer, might take shorter, doesn't matter, but eventually you will succeed as long as these three things you are able to ensure.
Right, Kushagra. Thanks for that. With this, I'll hand over to Divya, my colleague and co-host, to kind of address the questions that have been asked in the chat box. Uh, I would request all the attendees if you could also populate with more questions if you have for our speakers here. Divya, over to you. You're on mute, Divya.
Yeah. Hi everyone, this is Divya from Indian Angel Network, and we'll be now proceeding to Q&A. The first question we have is for Kushagra and Bharti, and of course, sir. As a founder of a startup, major problem would be in cracking the investment from investors. How does an investor evaluate a potential investee company when there is an existing competitor on the floor? In most cases, we see funding is given to the same idea-based startup with an almost similar market strategy and approach. Why is this?
So, for me, I mean, my advice will be that, rather than thinking it from an investor point of view, you should think about it from a customer point of view. So the question that you should really ask is that, if there's a competitor who has a similar product, same strategy, etc., why is it that the customer will choose you, right? And if you're able to figure out that answer, that why the customer will go with you, you might have to make changes in your product, your strategy, your pricing, or whatever that is, right? I believe if you're able to figure out that answer, that why the customer will go with you and not your competitor, I think eventually you will figure out the investor piece, right? Because all said and done, I mean, investment to a very large extent is a function of the traction that you're able to build, right? So rather than using the investor's lens and saying that, why the investor would come to me, I would rather focus on why the customer would come to me. And, just think about that piece. And I'm sure if you're able to figure out that, why any customer would come to me and not to my competitor, I'm sure you'll be able to figure out the investment piece as well. And the other thing also being that, if you're able to figure that out, I think India is a very large market, right? I mean, and if you're building for the global markets, even a larger market. So you will find investors, etc., who will, I mean, I have not seen any sector where there's just one company that every investor is chasing, because ultimately there are multiple investors. So they will look at, people who will come compete, take a portion of the market, etc. So I think those things will fall in place if you are able to answer that customer perspective question. And if you're able to convince the customer, you will convince some investor to invest.
That's a very valid point made by you, Kushag. Sir, anything you would like to add?
Yeah, I mean, I think, we can write theses on strategy and business and so on, but what I have found very simply are answers to these four questions, and which in a way Kushagra referred to. And what is your anticipated expected customer base? Who are your customers? Number two, what is it that your customers want? Number three, are you in a position to provide that? And number four, why would they buy it from you and not from anyone else? Now, if everyone, if you are just going to do more of what anybody else is doing, then you have to figure it out, that how is it that your product is going to be different experience for the customer, either in terms of cost or pricing, or in terms of quality or characteristics. What is your USP? Either it is cost-based, price-based, or it is customer benefit-based in some sense. Why would somebody come and buy it from you? I mean, I do remember the early days of my practice when they were industrial licensing, and everything used to be done by industrial licensing. And the Ministry of Industry would publish this list of licenses. people who are getting industrial licenses, and people just choose to follow like sheep. If somebody is applying for industrial license for for circular, those plastic sacks that they used to make for cement, and you will suddenly find hundreds of people applying for those licenses. So the issue really is that if you got something to sell, why would anybody buy it from you? So unless you answer that question, because I saw even in the chat box that the other competitors, fine, you got to distinguish yourself and say, well, my competitors do this, but this is what I do differently.
Right, right. Absolutely, sir. Next question is from Kushagra and Bharti. So the question is, how do you know how much money you need and how could you scale your business with less?
So, I mean, there's no single answer to this question to finding out how much money do you need. But I think, in terms of, for example, figuring out how could you scale your business with less, I think, again, I would say turn it around and say if you are getting more money, what more could you do, right? What more could you build? Because ultimately, time is more of an essence rather than money or even dilution, right? You might want to try and avoid dilution and hence you want to raise less money. But rather than trying to, look at it from this point of view of how do you need less money, it would probably make sense to see if there is an opportunity to raise higher funds, what more could you build and how can you ask for a higher valuation in that case, right? If you want to avoid dilution. I mean, I think a lot of times founders, focus a lot on avoiding dilution and avoiding giving away control. But that's, I would say, not always a bad thing, right? Sometimes you need dilution, you need to get in investors on board, and you need to get in capital so that you can grow your business. Otherwise, your idea, while you will still end up controlling a large part of your country, your idea might still remain at an idea stage and might not be able to reach its full potential if you're not able to get the capital that you need. One of the things, obviously, that people could look at could be a combination of debt plus equity. If you've reached that stage where debt is accessible, it would usually be if you've been, if you have some recurring revenue coming in, or if you've become profitable, there are various debt options available. So that can be looked at if you want to avoid dilution. But I would say, the focus should be on what can you achieve with more.
Right, right. So this is the other question is quite a generic question. It's how do you find the relevant investor for your space? Like whoever is working in a particular space, how easy it is to, or how difficult it is, and how to basically realize that this is the investor we should go to, and he would be interested in, funding us. Kushagra, Bharti, would you like to take this up?
I think Bharti can share her perspective. Then I'll.
Sure. So actually, again, I don't again have a straight answer to this question. I would say, in terms of finding the right kind of investors, one of the most important thing is probably to first be clear on, what is it that you need, right? If it's just money, which usually will not be the case, then obviously there are a lot of investors available. But if you need guidance and if you're sure that, there is a particular area where you need guidance, then you would be able to identify people who've been entrepreneurs in that field, and they might become the right kind of investor for you. But sometimes, even as a founder, you are not sure what kind of guidance you need. In that case, I think it's always possible to find people who you resonate with, right? Who you think that your kind of value system or your your purpose matches. So for example, I would share in our case, right, with Sagar sir, I think Sagar sir was really keen about solving the problem of air pollution and sober we, and I think that was one very important fit for us, and we felt it through our journey, that I think whenever we've been interacting with sir, he has always come from a point of understanding what we are trying to do, understanding what we are trying to build, and we've never felt that we were at dissonance because we knew our purpose was aligned. So in that case, maybe just an alignment in terms of the purpose could also be an important parameter there. Sir, if you would like to add anything.
Yeah, I just a couple of points, because the interesting thing is that once you are little, more mature and you're going into series A, B, and you are going forward and VCs are coming in, then of course some of this becomes easier to answer, because you do have funds and venture capital funds even now who are dedicated to clean tech or those sorts of things. So those will be some of the natural approaches, or people who are working on the social impact side, particularly for a venture like this. For example, there would be certain types of funds who would want to invest because by their own way, the rationale for their own reason they raise the money is for investing. So for example, if it's a healthcare company with a healthcare startup beyond a certain stage of maturity, it will go to a fund which has already committed to say, we are going to be invested in healthcare. So it's easier at that stage. It's a little bit tougher in the beginning, in the sense because you really don't know where this will rhyme, where this will ring a bell, or where it will be rhymed with someone. And that's where quite interesting thing is that the angel networks come in there as well, because once you pitch to an angel network, for example, there will be several within those groups which will have an affinity for or a liking for, or they want to do something in that space. So yeah, I mean, it's clearly, and I wanted to just comment on an earlier point that Bharti had answered the question earlier, how much money do you need? And frankly, that's like asking how long is a piece of rope. I mean, you don't know which way you want to go, whether you want to increase the size of the pie and have a smaller share of it, or you want to keep a bigger piece of a smaller pie. So whilst mature businesses debate between market share, top line and bottom line as margins, but when you are a startup and you are a founder, you're also worried about the third piece, and that is your own share of all of that. And I think if you're not very clear on what your own goals are, you can really get into a problem, or you will end up, frankly, not realizing your potential because you're so scared of what may happen to you and your personal share, versus saying, okay, I'm taking a bet on this, I'm putting my best into it, I've got great investors, I've got great technology, and I'm going to grow this business. And even if that means that I have to dilute, I don't mind, as long as I am achieving those longer term goals. So what are your financial goals? Short term, long term, medium term, long term, and what is it? What is your purpose? What is it that you're looking for? So I think all of those factors come into play.
And just one small thing to add, that, given the current uncertainty in the market, given the COVID situation, new variants, third wave, etc., all of that, my advice to all founders will be that, just raise as much capital as you can, because you never know when, the third wave or a new variant will come in, etc., and the economy might be halted again. So hopefully that will never happen, but you can, as Sagar mentioned earlier, you can never be sure for the next at least 1.5 years.
Absolutely. I think that's a very good piece of advice given by Bharti, Kushagra and Sagar sir. Next question we have is, the relationship between investor and entrepreneur is not generally seen as a long-term relationship, when in fact trust, commitment and communication form some of the strongest pillars on which the relationship should be forged. So what other advice could you share in terms of developing a relationship between entrepreneurs and investors? So
yeah, well, I mean, it is like, isn't it like any other relationship where there is a give and take, right? So whether it is a startup and an investor, or or a familiar relationship, there is always the give and take, and each person has his own objectives. And those who succeed the best are the ones who are able to balance those objectives, so that there is, the classic win-win for all. So it's no different in the sense that, yes, people do come in who may have at the face of it different objectives, and they may look contrarian to begin with. But you have to see, how do you find that balance? So the investor would want obviously a highest return, but is that a bad thing for the founders? And that's where the classic question that Bharti was raising. Your investors may want more money to come in. They may want to bring in more investment. They may want to say, okay, now is the time for us to get to the next rung, and we not to go into growth capital. We need more money. And if the founder says, no, I don't want to give up any more equity, now that's a problem, right? So we have to see that how do you convert those potential conflicts that are there on the surface or otherwise, how do you convert those into opportunities and those into situations where people can build consensus as to the going forward, the purpose of the company, why everybody invested. And of course, investors at some point in time would like to exit at some point in time. I mean, even if you're a unicorn, the pure investor, unless a strategic investor, all others are investors. I mean, they are not strategic in that sense. So to some extent, therefore, that particular piece has to be also recognized by the founders. I mean, everyone comes into any deal with their own interest. And the issue is that how do you manage those interests? How do you manage expectations? And how do you balance things out? So that's where the trick lies. How do you keep your investors happy and how you keep yourself happy?
Right. Any inputs from you, Bharti and Kushagra, from the startup perspective?
I think my advice will be that, keep the expectations need to be stated very clearly, right?
And managed.
Yes, absolutely. So for example, if it's a venture capital fund that is coming in, right, they will have a certain fund life. They would want to exit at a certain period in time. And there's nothing wrong with it. I mean, that's just the way, it's structured. That's the way the things are. So I just think, whereas if a strategic is coming in, you can expect that, it will be a longer term commitment, etc. And, they might even look at further investment, maybe an acquisition, etc. So I just think that the expectations need to be very clearly stated that, this is what we expect. This is what we are going to bring on the table. So there should be no confusion around that, because later it should not become a point of contention. And as Sagar has said that, once you have the expectations clear, just find a way that, you create a win-win situation for both the entities that are involved, right? Be it through, you can take further investment or whatever way that is, right? Just ensure that those expectations are very clearly stated when you get into the relationship with the investor. And then just figure out that how will you create a win-win situation. If you think that the expectations are not what you need and there's money coming in, my advice will be that not to take that capital, because later it will become a point of contention, and then it becomes very difficult because you have a business to run. Then you have an investor who has certain expectations that you're not aligned with or will not be able to fulfill. And ultimately, I mean, that money also that you get in may or may not create the best value for the company and all shareholders involved. So I think that is what it is.
So I guess the major takeaway would be no confusion regarding the expectation setting in management.
Yeah.
That should be clear for both the parties.
Yeah. Because, just 30 seconds, just to share, for example, if the expectations are not clear, so for example, you raise fund from some investor, next rounds, the rights will be negotiated. Maybe a larger investor is coming, maybe a different nature of investor you are trying to get into the company. Then even those rights, etc. I mean, it all becomes a point of debate, and so you would ideally want to avoid that. So you want to be very clear as to, this is what the expectation is.
Right. Absolutely. Next is a very interesting question for Mr. Jyoti Sagar. So when you became an investor, what were the biggest surprises and challenges you encountered? And how did you deal with them? And what were the lessons learned, during your journey? And how did you overcome the challenges?
So it's not very clear to me from the questioner as to when I became an investor, because I don't know, in investor in Chakra or otherwise. I started to
otherwise
invest
in general.
Yeah. So from personally, I think there are a couple of things that I wanted to clarify and mention. That I have been in practice of law now for 45 years, and I've had I've done, I won't say spectacularly, as compared to some of my other peers, but I've done reasonably well. I have over a period of time been very cautious investor. I stayed with mutual funds, and which still is 90% or more of my investment is still in very safe things like mutual funds and so on and so forth. I do have some investments now that I have grown older. I have a pool of money that I can use in a way with a little bit more risk, risk attached to it. So I've done investments in AIFs and so on. And lastly, and this is what I call my, I won't call it my hobby, but it's just an interesting thing for me to do in terms of investing in startups and so on. And another motivating factor for that is that you are actually, I won't go as grand and saying I'm giving it back to the society as people do, but it's just that you are doing your own little bit in promoting the ecosystem for startups, promoting the ecosystem for innovation, people, and so on. So that motivates me as well. So in other words, I mean, the risk part and all, frankly, that is the reason why in AIFs and all, they expect high net worth individuals to come in. It's not that your life depends on that investment. It is something that you're doing, you're otherwise financially secure. So I happen to be in that happy position that I am financially secure I've finished with my, as the proverbial, responsibilities of life in a way. And so I am a little bit more, I have a little bit more risk-taking thing. Plus, for the startup community and as a participant, and I have generally participated only with IAN. I haven't gone ahead and done any specific, at least in recent years, apart from going through the IAN network. And that is just as a part of my doing my little bit for building the ecosystem, for building the opportunities for young people, for innovation, for all of those nice cliched words. So, and they apply to me as well. So I think it's a long answer, but I think the question was very general. So my answer is very general as well.
So in the interest of time, we'll be taking one last question. So this is also a quite generic question. If we have, this is from a founder. So if we have invested on our own in our startup to develop till POC, then at what stage do we ask for investors to come in?
Yeah, and it says gone to say our main requirement is for investment requirements for commercialization. So your GTM is that you're going to market. So Kushagra, would you like to answer this?
Sure, sir. So if you're able to get to a POC stage based on your own funds or maybe some grants, etc., and if you think you're just at that verge where you're ready to commercialize, my advice will be that if you've been able to pull through the POC and have customers who are willing to test out your technology or use your product, my advice will be to still stretch it out a little and get in 2-3 larger customers, more customer validation, because you might believe that your POC etc. is ready, but having that validated from the customer, I mean, there's nothing like that. So my advice will be that if you've been able to come this far, that the POC you've been able to do on your own, start speaking with investors, start telling them what you're doing, why you're doing, what stage you're at, which customers you're speaking with, right? Once you're able to get in those initial 2-3 customers who are willing to either pay for your technology or willing to place repeat orders, scale it up within their organizations, I think that validation in a way completes the whole thing, that your product is ready, customers are there, they're willing to pay. Might be smaller customers, might be very limited number of customers, but there is nothing like customer validation. If you're able to do that, it will essentially, when you go to raise capital, the kind of valuation, the kind of terms that you'll be able to get will be at least 3-4 times better than what you will get at this point in time.
Yeah, well, as many things in life, this timing is of the essence here as well. Timing is of the essence. And at POC level, I mean, I think you shouldn't really do, going into any early stage VC or anything. If at all you have any need, then probably angels can still help even at that stage. But I would not suggest that you go out in the market space, for saying, okay, now I need to have investment to go to market. I would rather say that GTM first, try it out a little bit, and then have validations, have the credentials, and then you would be better placed, certainly with the larger outside investor world.
I'd like to just add here, to the gentleman who asked this question. So you'll find all set of investors right from the idea stage till late stage, right? So investors
Exactly.
are there to pick you wherever
Correct.
possible. But the later they come, the better it is for the organization in a longer term. So, like what Kushagra said and what Jyoti Sagar said, I think very nicely put in. I mean, you have to get some validation, some paid customers. I think that kind of really helps in terms of actually determining what the valuation of the company should be, rather than actually going at a POC stage where you don't know how the product will actually react once you launch in the market. As I interact with a lot of entrepreneurs, I do see one more problem, and I see a lot of questions pertaining to that also coming here. So you should, most of you, I don't know how many of you would have mentors on board, especially in a tech company. If I run a tech company, I would have technically two mentors. One who understands tech to a deeper level, gives me knowledge and guidance on the tech piece, and the other on the business mentor, who will actually help me understand where to go and how to approach. And that gentleman or lady, whoever the person is, will be able to actually help you connect with right doors of investors or advisors or larger fund raise whenever you require. So mentors are a key element. And just one feedback, just to close it from my end, would be that, just for whether I read somewhere, they know how to impress investors and all. I mean, honestly, that doesn't work. I mean, if you have a fantastic product, investors will follow you. Trust me, that's what they do. Honestly speaking, that's what my job is. If I find something interesting, I'll kind of chase the entrepreneur down. That's my job, right? So, like that, investors would also follow you if you have something really phenomenal to offer. So, you don't have to go chasing investors, they'll come chasing you if you have, stay focused on your product. And one very important thing, any investor who's cutting a check on you with an open heart, and a good investor, I would say, would want the founding team to be a mentorable team. If you're going to be really non-mentorable, trust me, there's no money coming out. That's going to be a challenge. So you have to be open about whatever feedback, suggestions investors or mentors are giving you. I always tell this to all my dear friends in terms of, if you have something as, a debate that has been done with an investor or anyone else, it's always healthy to have a debate, put your points forward, but don't let the debate get into an argument, because the moment you do that, then it becomes an ugly situation to be in. So just be mentorable enough, be open about taking suggestions. Eventually, you would do what you want to do, which is understood. But the point is that, learn from others' mistakes also, I would say. Back to you.
I think just that humility and being humble, that helps.
Right, absolutely. That always helps. So with this, we come to the end of our second virtual Chai Tie-in session. I take this opportunity to express my heartfelt gratitude to Mr. Jyoti Sagar. Thank you so much, sir, for taking out time and share your valuable insights. Thank you, Kushagra and Bharti, for joining us today. I would also like to thank Amazon Web Services for furthering as IAN, our mission of nurturing and strengthening the early stage entrepreneurial ecosystem in India. And for all the participants, thank you all for joining in and making this session a hit. I hope we added value to you. And in case your questions or queries remained unanswered, you can always write to us at events@indianangelnetwork.com. Thank you so much. Thank you so much, everyone, for joining.
Thank you, everyone.
Thank you for having us here. Thank you so much. Bye.
Thank you. Bye.